All right, let's get right into it. For what feels like forever now, the whole AI investment story has really been about one thing: the hardware, the chips, the infrastructure, all that raw power. But things are starting to shift. We are absolutely entering a new phase. So we're going to break down why the next huge opportunity isn't in making the chips, but in something called diffusion, which is just how AI actually starts to spread out and, really change how businesses get things done. This quote just hits the nail on the head, right? It perfectly sets up the massive shift we're about to dig into. I mean, we've all seen the insane returns from the companies selling the tools for this digital gold rush. They've made an absolute fortune. But now the real question for any smart investor is changing. Who is actually using those super expensive tools to find real profitable gold? And maybe more importantly, how are they pulling it off? So to really get where we're going, we've got to take a second to appreciate where we are right now. This is phase one. This is the giant worldwide build-out of AI infrastructure. It's the part of the revolution you see everywhere, it's what's all over the headlines, and the amount of money pouring into it is, well, it's just mind-blowing. And this number, wow, this just shows you the insane scale of it all. At its peak, this was the market cap for one single company, NVIDIA. A valuation like that isn't just about having good tech, it's about this crazy, almost desperate global hunger for their chips to power this whole transformation. It is the textbook picks and shovels play, right? Where selling the tools to the miners is often way more profitable than the mining itself. And believe me, this gold rush is not slowing down. Projections are showing that by 2026, total spending in the AI world is going to soar past $2.5 trillion. To put that into perspective, what we're watching is one of the biggest and fastest deployments of capital in all of human history, all of it chasing the promise of artificial intelligence. The whole ecosystem of this first phase is actually pretty simple to understand. You've got the chip makers at the bottom of the stack, folks like NVIDIA and AMD, making the essential hardware. Then you've got the infrastructure providers, the big cloud giants, the hyperscalers like Amazon, Microsoft, and Oracle, who are buying those chips by the truckload to build these massive data centers. And then finally, at the top, you have the AI model companies like OpenAI and Anthropic, who rent all that compute power to train their incredible models. But here's the thing. Whenever you see this much money moving this fast, you have to be skeptical. It's not just smart, it's necessary. And right now, the smart money is starting to look past the hype and ask some really tough questions about whether this boom can actually last. The foundation of phase one is, well, it's starting to show some pretty serious cracks. And this is the question haunting everyone, isn't it? It feels like we've seen this movie before. You have a game-changing new technology, total investor mania, and company valuations that feel completely disconnected from reality. The parallels to the year 2000, with companies just burning through cash with no real path to making a profit, are getting a little too close for comfort. And this is where the numbers start to get really worrying. There's this huge disconnect opening up. The big players are spending over $400 billion a year building out AI infrastructure, but the actual new money being made from enterprise AI apps, it's only about $100 billion. That giant $300 billion gap is a massive red flag. It makes you wonder about the return on all this investment. And the problem gets even worse when you look at the companies that are actually trying to use AI. The results are, well, they're pretty sobering. According to a McKinsey study, a shocking 61% of companies say their AI projects have had zero, that's right, zero impact on their earnings. They're spending the money, they're buying the shovels, but they are not seeing any results on the bottom line. This is not a success story, at least not yet. Which brings us to one of the biggest worries hiding just under the surface, this idea of circular financing. Let me break it down. You're seeing how the money flows here. A company like Microsoft will pour billions into an AI startup, let's say OpenAI. Then, that startup turns right around and uses that same exact money to pay Microsoft for their cloud computing. See the loop? It creates this illusion of massive organic demand. But some people worry it's just a fragile system propping itself up. Okay, so that's the problem. But you know what they say, every challenge is an opportunity. This is where we pivot. We're going to move from that first-level fear to a much more sophisticated second-level way of thinking. This is the phase two play. This is where the real, long-lasting, and maybe less glamorous value is actually going to be made. This is where AI diffusion really starts to happen. Now, the key piece of tech that's going to drive this next phase is something called agentic AI. We have to stop thinking about AI as just a chatbot that answers questions. Instead, I want you to think about autonomous agents, software that can understand a big picture goal and then, on its own, figure out and execute all the complex steps to get there without a person holding its hand. This is the engine that's going to let AI really spread through the economy and automate entire workflows. So here it is, the most important point of all. The next gold rush is not about building bigger, more expensive AI models. It is all about deploying these very targeted agentic AI systems to completely re-engineer how a business works, to slash operating expenses, especially those huge labor costs, and to drive real, tangible margin expansion that you can actually see on an earnings report. And guess what? This is already happening. I mean, look at the legal field where AI from companies like Harvey can automate thousands of hours of boring contract review. Or think about software, where Cognition AI's agent Devin can write and debug whole applications by itself. These are companies in industries with massive labor costs, and they're not using AI as some flashy new toy. No, they're using it like a surgical tool to become way, way more efficient. Okay, this all sounds amazing in theory, but how do you actually go out and find these companies? Let's switch gears from the what to the how and put together a simple framework you can use to spot the potential winners of Phase 2. The very first thing you need to look for, as the great Warren Buffett taught us, is an economic moat. That's just a fancy term for a lasting competitive advantage. In Phase 1, the moat was all about having the best hardware. But in Phase 2, the moat is something totally different. It is all about proprietary data. See, a company that has its own unique, protected dataset can build specialized AI agents that nobody else can copy, giving them an edge that's almost impossible to beat. This chart just lays out the difference perfectly. Phase 1 companies, your chip makers, have these insane valuations based on what might happen in the future. They need tons of cash to run, and their advantage is hardware. But Phase 2 companies, the implementers, they should be valued based on actual margin growth. They don't need nearly as much capital, and their value comes from cutting their own operating expenses, or OPEX. This means we need a new way to measure success, the OPEX to AI ratio. It's not about how much you spend on AI, it's about how much you save for every dollar you spend. But hold on. Before we all get too excited and run off to find the next big thing, we have to end with a really important and sobering reality check. This shift is not going to be easy, and the hard truth is, there are going to be a lot more losers than winners. Welcome to the Great AI Divide. Here's the brutal truth. The vast majority of companies, we're talking maybe as many as 90%, that try to jump on the AI bandwagon are going to fail. They're going to spend a fortune on flashy tech, they'll chase the hype without any real strategy, and they will see absolutely zero return on their investment. They're going to buy the shovels, but have no map to the gold. And this right here is the final takeaway. Just buying some off-the-shelf AI tool is not a strategy. It's not going to work. The winners of Phase 2 are going to be the companies that already have a deep built-in advantage, that proprietary data moat we keep talking about, that they can then supercharge with these new agentic tools to become efficient in a way no one else can touch. AI is just an amplifier. It makes a good business great, and it makes a bad business fail even faster. So there you have it. That's the framework. The AI revolution is absolutely here, but the game is changing. We're moving from a game of who has the most raw computing power to a game of who can be the smartest and most efficient. So the question you have to ask yourself is, where are you going to place your bet? On the person still selling shovels to everyone that comes along, or on the one who has a unique map, a deep data moat, and is quietly starting to dig up the real gold?